Welcome back to AZ once again. And today, we're going to make it short. So the year is almost got to the half. And by the end of this month, we're going to have a half years already spent. Guy, go back to your data, go back to your activities, review everything you've been doing, see what is working, see what is not, embrace what is working and move away from what is not working and celebrate something, anything at all, celebrate something. And this today's topic is weekly analysis for day and swing trading. What are we trying to get here, my friend? All we're going is to get a freedom. We call it a living freedom, a version living freedom. That is what we're actually seeking here. And means if you are seeking for a freedom, we should not get into another slave trade with this. Yes, there's a point that we have to be very addicted to it so that we can develop a strategy and a system that is working for you, that can be using to work with markets. And that is very okay at that stage. But when you get to the money part, when you want to start making money about in this market, is about detach from the chart from the chart itself. Just be a trader who know what time you used to come here to see what is happening and react. Not just I'm a day trader, just come here and sit down and watching how it moves. I don't, it's not mean say it's not good or no, but no, I'm just saying when you get to the time to use to make the money, to use that skills perfectly, it's about timing, it's about comma, apply what you have to move with market. So we're going to talk about 2 weeks or 3 weeks example. So mostly how we do as a day trade is see how much it go, but let us just do this 2 weeks. So there's a closing week here, call it low and high. We have the high and the low of this week, of this weekly candle. So this is what we have, and we have what again? We have the opening price and we have the closing price. So this is the closing price. So this is the opening price and this is the closing price. This is the high, this is the low. So we want to trade this new week. So this, what you are showing here is just to give you a very good roadmap. So you can actually practice what you have. Be like a trader. You trade like a trader. So this is not strategy. This is just pure understanding. So this is Monday. This is the low of the week, high of the week, opening price, the closing price levels. These are the levels that are marked. So the first thing you know that is going to happen, that 90% going to happen, is price will seek one side, go here, continue, or go back inside, or price will seek the high as well, continue going, or come back inside or retest. And whatever it is that they're doing, all I'm telling you is that they have to go to one side. So any market, any movement that stays inside, we can call that one the consolidation week. Market will not have very good expansion. So there's no good delivery. Now, when the level that is very, very important here is the closing price for that week. The closing price for that week is very, very important. As opening as also, but closing is very, very important because that is where the agreement settled in. This is where we're gonna, they were selling. This is where we can go for this week. Next week, we see what to do. We see what can be decided. But what do you see when market open? You see market broke above the closing price. In this scenario, also broke above the opening price, above the opening price, above the closing price. This scenario will be telling you that, oh, I want to take this high. So if you're looking for a buy from this kind of moment, a breakout here to this area, to above level, looking for buy to this level, it's not a bad thing. All you have to do is just make sure that the market break it out, find some retest here. The retest happened there, but it did not show the confirmation of going back. It broke it below. So in this kind of scenario, it can be changing you that market is not ready to continue again, but you want to buy until it finally break down here, break down between the closing price. This scenario is very good. I'm looking selling toward the low, just like you're looking for it here. So it's not you or me that said market should not take this high, but what we know for far that market will go to one direction, go to this place or to this place. As you can see, they fake it out here like they want to go and they drop it down again and come down right here. So in this scenario, there's no way, maybe you want to try some buy, you fade that one, then you go back into selling. Luckily, you'll be in the winning for that one. So that is how you can be using weekly to understand where you actually be waiting for to go to, because you know market will either go to one side. But where the market confuses you, they are going actually, do you see a breakdown below the closing price? Market is operating below the closing price. You should know that the bearish is still valid. If market was bearish as a closing week, or anywhere they break to, mean that if it's bullish, the closing price is very, very important. So you could see how market do. On Monday, you fake it out, since they come back inside. Wednesday, you used to sold, retested there, like you want to go sell it down again on Thursday before another change of character happen. You now start going inside. So that's how the weekly goes. So let's see another 1 week. And we now talk about how, to practice of then into, once you already have the data, so want to trade this closing week. We have this high and the low of the closing week. So, and this is the low, the closing price, the opening price as well. Very small candle, but then let us cheat data. Data is data. So opening price above there, the closing price below there, the high and the low. So now you have one thing, just like it's not you and it's not me either. It's market things. And what is that thing? Is the market will go to one low. So this is Monday. And what do we see here? We see price was already below the opening price and now broke below the closing price as well. It broke to the closing price, do some retest also, and confirm like I want to sell. So in this scenario, for you to be looking for selling as a swing or day trader, it's not a bad thing. It's not, in fact, you actually do what you see. So markets break below here, do some retest and another rejection. So why are you not targeting here? Because you know that either here or here, it is go. Yes, market can keep dancing inside, and not make any significant move. But the goal is you're targeting this side or you're targeting this side. Based on where market breakouts to, this is the closing price and this is the opening price. If I break above the closing price towards the up, why would I be fighting it to target this high? I will not. That is why I will not also fight this war. So now, as a day trader or as a swing trader as you are, if you're a swing trader, this is a very, very good area for you to look for sell. You see a breakdown, then see market come back at least to any if you ever look up area or the last bullish candle. See this kind of rejection. You can be in a short swing trading like this. There's nothing will be a frightening for you than to apply a risk of what you can actually risk and let the market decide here, because it already showed you break below the price, come back retest, very, very confirm. I want to go low. So should be trying to go low until otherwise happen. And just like this. So, and if you are a day trader that you want to, see the possible thing to happen, for that swing trading, you can have maximum 2 positions. You can see you give like 2 positions, a very retest confirm, another repass confirm. So, but as a day trader, so coming down to lower time frame like 15 minutes to see sharp things like New York session will be very good because you need volume. That is where timing is very important. Any pair you are trading, based on the quotes, the one that influence each other. So this is gold against USD. Is good against USD. That means whatever it is that is affecting USD positively or negatively is going to be an effect on this gold market. And that means New York market will be a very good time for you. Just know what you are looking for based on the analysis you have on our time frame. You are looking for selling. You see market delivery, selling that day. If you know what, as a day trader, if you get 1/3, 1/3, 1/4, 1/2 in this kind of move, if you know how to go in, that is your job. So this is the retest also. You know, it's already confirmed here, but as a swing trader, you're expecting the retest. So in this kind of scenario, you can see the very delivery during the New York session as well. Now, if you know how to go into in here, you can actually target in 1/2, 1/3, or 1/4 and get out as a day trader. And this scenario also, no matter how it is, looking for selling is the only option that will give you a very guaranteed things. And looking for buy also is not your core moment because what you are using. So also at this one, also looking for selling that day, majorly this. Anytime there's a very significant news and you have your direction, I don't see anywhere where this news just move against actual price, actual delivery. It's just like a food fit to give you more power. So you can see looking for 1/2, 1/3 during this hour, during this hour, without fear, without double doubting. Just know where your risk, how you can. Then as a day trader is supposed to survive with this kind of thing. And as a swing trader, keep it there. Keep it to that 4 hour. You can get like 2 entry, which is very, very advisable. Very good retest. You've been in markets here. Breaking this low is enough for you to take some profit. Another retest to this fair value gap, another bearish confirmation, then start selling again. And that is out. So let us do this closing week. This closing week. First of all, something I did not mention is that for any you have to have a monthly up monthly also mark up. So I will just do it for the sake of we are doing this for the new month analysis, new week analysis. As a we want to trade this new week. So this is the May, the last month close bearish. That is the level. So we should know that price is below the closing price of last month. So market price is trading below the closing price of last month. That is a very good significant of is selling market. You understand that? So market is still below the closing price for the last month. That's a very significant movement for a selling bias. So you just want to mark this. So this weekly, now we have what? We have the high right there. Let's mark the high as red. If market take it, it can be a sell. And a green. This is our high, this is our low. Now the closing price is here. Very, very, very close. Very, very strong bearish movement. So that is our bearish. And this is the opening price here. You don't predict market. You only want to what? You only react. So we have so let us go to 4 hour. The monthly tells you that they are trading below the closing price. That is a very good thing for you to know that, okay, this month is still being a bearish month because it follows, it's still following the last monthly movement. So in sharp, this is the low of this closing week yesterday, Friday, and this is the high, which is the Monday high, and this is the low, and this is the closing price level. This is the major point or scenario. Now, and this is the opening price, and this is the high. So the first thing that you and I know that it's not maybe or not, maybe not, or maybe it is that price will deliver to one side here and continue going, reverse and continue going. Or we can just go back inside again before coming down. So this is not about prediction, like I said again. Just see. But what we know is that market is taking this low or market is taking this high. That is the best thing that we could ever imagine for. So the best thing you could ever imagine for now for you to have a very good delivery week is market taking this low and continue, or take this low and start hunting this high. And that would be a very good delivery. But if prices do not now be dancing here, it's not going to be a very swing. But what is important mostly is the level of where the price closed. So the price closed below here. So if price broke above it, above the closing price of that last week, market is operating above the closing price. And see that a breakout, a retest, then you should know how you will react with it. This level is very, very important. So that is how you can be using weekly for your swing and day trading. And it's very, 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 very easy because it will buy back time for you to, to do something more because you are built for more. Trust me, you are built for more. And the more you are doing, the more you get more. The more you are doing, the more you will get hungry. So be a trader, don't be the slave. You don't want to be a slave in the first place because we already been enslaved in many ways that you cannot even imagine. But another topic. So enjoy your new week trading. And as I said, practice, practice, practice. Self-taught is above all.